Ira Epstein, and here we are on Monday evening. This is the 15th of December, 2025, and we're sitting here right now, in the neighborhood about 6:15 p.m. Central Time. Well, the first thing I have to say is if Santa left the North Pole, he must have had too much eggnog because the market is slipping on him pretty good right here. There's still time for that Santa rally, of course, but the market is first taking a lot of people out to the watershed, if you will, or whatever you want to call it, and giving them a little spanking, and that is going on. So be aware of that. Let's talk about the news for tomorrow. We're going to get advanced retail sales data for October. That'll come out at 7:30. The November non-farm payrolls data comes out tomorrow at 7:30. The October numbers, remember, they've decided not to do them, and that was due to the government shutdown. Redbook weekly retail sales for the weekend of December 13th coming out at 7:55. We'll get S&P Global Groups. They're going to release their preliminary December manufacturing and service sector PMIs at 8:45. The September business inventory data will come out at 9, and the API numbers at the end of the day will come out and give us the stockpiles of petroleum products. But in coming back to the markets here, you can see bonds and notes, well, they're just flat. The gold slipping back a little, but each day we're getting ranges of $30, $40. It's a common event now. Silver, if you don't get a dollar range, it seems unusual. And as I said, the stock market's still breaking down right here. When we come to the gold market, it's been on a tear, and if it closed here, it would be an all-time high close for the week. Now, it's only Monday, so we have a ways to go. It's up 0.15%. When you come to the daily bar chart, you can see you really haven't done an awful lot recently. You've come back up, you haven't gone through these highs, and the market has spent some energy getting back up here. The pattern on the chart has been one of a lower low and a higher high. You can see the higher high here, but you have the lower low right there. As we step over and we look at the moving averages, the 18-day, the 100, the 200, the market's still lined up beautifully to the upside. And where the market's having its problem right now is the upper Bollinger Band. Remember, markets only stay over those Bollinger Bands 5% of the time. There's nothing to stop them from running the band, but they'll stay over it just about 5% of the time. And you have an overbought market. Now, back here when you were running the band, you had an embedded reading. It's when the K and the D line that make up the slow stochastic are going over 80 and they stay there. See, that's how that worked. And when you lose that reading eventually, it's a sign you're going to correct. And how deep I teach in my charting course what to look for, the enhanced Bollinger Band course. When we look at the D's gold silver ratio, D's, you can see how the market is just still fighting right through here. We'll see where this goes. It'll be shortly time for us to move to the Fed gold March silver. When I take a look at the silver market, I was looking at it just 1 minute ago, and the high that we had today, not tonight, was 64.26. You're not through that just yet, but you are in an uptrend. You're fully embedded. Market on breaks is still getting bought. Let me come back there for 1 second. Just want to show you the size of the ranges you're getting. Look at this, 65.08 to 61.05. That's a $4 range. Right here, 61.60 to 64.26. That was today. So you're getting, like I said, crazy ranges in the market. And if you're wrong, it's very painful. In the copper market, just the other day, you had a big washout and you made up a little bit of ground of it today. And that's about all that I can say. You're overbought, void of a trend with a higher high now and a lower low. But the market, of course, is still overall in a bull trend. In the platinum market, you keep running up to the upper Bollinger Bands. You're not embedded. You're spending a lot of buying power up here. Be careful of a pullback at any point in time. Not a bear market, just a pullback. And this is a very important area for the dollar index. The dollar index is now 3 days in a row of fighting the 100-day average in the Bollinger Band for support. If it embeds bearish, not here, day 1, look on the left, 2, and today could be the 3rd. that could spell a kiss of death in this market, and it could be worth quite a bit of money. I mean, when I look at the market, if it wanted to go down and really pick up momentum, why not go back to the 96.40 level? All right, it's right in through here. So it's very real possibility, especially if you get the embedded reading. Now, I'll be talking about that and a lot more in my research and how you get to my research. You move your cursor up here, you can come over to this part, or better yet, just go to iraepstein.com and it's right in the research section. I'm Ira. You have yourself a great evening, and I'll catch up with one and all in the other updates tonight, and of course, in our morning subscriber videos, along with our morning flash video. Take care.